All right, I'm almost ready to go here. I'm just going to plug in my headset so I can. There we go. All right, here we go. So, can you see my slides? I just hit record, 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 and make sure that my little righty thingy is going to work here in just a second. You should be able to hear me, hopefully. All right, so we got to do this daggone disclaimer, right? Because I'm registered. I don't want to go. I don't want to get fined or go to prison. I don't think I'd do well with orange juice with Bubba. So let me make sure that my writing tool is in fact working. And then while I'm doing the little writing thing, answer this question right here. Up at the top upper right hand corner. What is the answer to that question if you can see it? I am the last speaker of the day. I'm going to try to give you the most value of any speaker. It's going to be my way of saying thanks for coming and joining us on Black Friday. So I'm going to try to teach you two things. All right, so the answer is right. All right, so warning, trading is hazardous to your wealth, and you're probably going to lose a lot of money, and don't listen to any of us because none of us know what we're talking about. Does everybody understand the blanket disclaimer? You sound like you're underwater. I shouldn't sound like I'm underwater. I should be peeking out pretty good. Is audio okay for most people? Does it sound clear and hearable? Okay, everybody else is saying I'm fine, so I should be decent. All right. No breaking up audio. That's usually just a function of there's so many people in here where GoToWebinar will just start clipping out on you a little bit. All right, so nice to meet all of you in Vegas. So what I'm going to do is, number one, I have to warn you away from trading. Trading is very risky. What we do for a living is very, very risky. Only trade with discretionary income. If you're trying to do this for a living and you don't have any other way of making income, don't do it. You're going to lose a lot of money, okay? You are just going to. It's just part of the deal. If you don't know what you're doing, even if you do know what you're doing, you could potentially lose a lot of money, all right? So CFTC Rule 4.41, read that. I'm going to show you some hypothetical stuff. I'm also going to show you a lot of real stuff, what I actually really do in my real accounts, all right? So I always make a joke, and it's not a joke to make you laugh, but I say it's like your trading career will probably end up like a bad country song. Like your wife's going to leave you probably for your best friend because it's a country song. Your kids obviously will grow up to hate you because that's just how it works. Your dog dies because it's a country song. There's no cats in country songs. They end up repossessing your truck and your trailer. I'm not going to call it a home because if it's a country song, it's got to be a trailer. Just give me a yes telling me that you understand the disclaimer that I have now warned you off of. Hopefully you understand. Yes. I had one no. So if you say no, just leave because I don't want the karma. All right, let's get started here. My name is Hubert Senters. This is my no BS approach to trading and investing. So I'm going to try to do, here's what I'm going to try to do. I'm not going to try to do it. I'm going to do it. I'm going to give you more value today than I have in the past because it's Thanksgiving. So it's going to be my way to give back. And what I'm going to do is, number one, I'm going to teach you a really cool bond strategy. I'm going to show you how to risk $156 to make $1,000. And then I'm actually going to show you how to use Ichimoku. I have, personally, the #1 best-selling course on Ichimoku. I'm going to show you the pieces of that today. Is everybody cool with that? Now, what it means is I'll probably a little bit longer. Is that okay? I've got family here. I told them I'd be done by 3, but if you want to, I'll stay until I get through both of those courses. Instead of it just being one little short bam, I'm going to try to teach you a lot of really cool stuff that'll give you a lot of value, okay? All right, so everybody's saying good, so we should be good to go here. All right, so I'll do my best to fly through the material. If you will, try to hold your question till the end because that'll make the presentation flow a little bit better, and then if I end up answering questions during the presentation, I'll get in a rabbit hole and we'll be here till 6 o'clock, and I know you don't want that. So here is a snapshot of some wealthy, successful, famous individuals that I spend time with because we're all in masterminds together. There's a conspiracy. All of us ultra-rich multimillionaires, we have these secret meetings. They're called masterminds. They're not really secret. What we do is each individual will have a meeting, and they'll cost anywhere from $25,000 up or more to meet 4 times a year, and y'all get in a room and just share your war stories, your secrets, your successes, your failures, and everybody just tries to help you figure a better way to just do stuff. So in this example, this is Paula Abdul. She's actually, believe it or not, shorter than that. She is a super tiny little lady. She's about 6 inches shorter than that because she's got 6-inch heels on that photo. This is Richard Branson. I do some work with his charitable foundation. Both him and I suffer from dyslexia. He's older than me, but I've got more chins than him, which probably means I'm going to die quicker than he does. This over here is just a snapshot that you have to do for like magazine covers or if CNBC wants you on their show. I do not dress like that. What I've got on right now is a pair of Adidas tennis shoes, a pair of Lucky jeans, and just a Under Armour t-shirt today, and that's it. This is Kevin O'Leary. We call him Mr. Wonderful. He's actually kind of evil, so let's give him horns and a little mustache and a little beard because he's kind of evil. We'll just make fun of him. And this here is Dave Ramsey. Dave and my organization, we work together from time to time on some cool projects. So now that I've scared you, I'm also trying to build you up and tell you that, look, if this redneck from Eastern Kentucky that grew up poor with no advantages can make it and be successful and a multimillionaire, you've got it in you too. You can do it. What you have to do is you just have to get around other successful, wealthy, driven people and figure out what they're doing and copy what they're doing. You will then get a bit of success just by rubbing elbows with people. You'll just learn some stuff, and you'll come out of your shell and say like, God, I'm scared to do this. Okay, well, that means I have to do it. You just have to be really, really comfortable with being uncomfortable. I would say 8 or 9 times out of 10, the stuff that I do, I'm really, really uncomfortable with doing. Okay, so you just if you're uncomfortable and you're in the right spot is the best advice I could give you. So hopefully that lets you know that you can do it. I don't have anything special that you don't have. I am a workaholic. I do put in a lot of hours. In this case scenario here is 24-inch LCD screens. These are 6 of them on this one main computer. This is a studio quality mic right now. That's in the Batcave. Now, a lot of people make fun of the Batcave, which I don't really care because I like it. The Batcave is an office in my house that's in my basement because I work so much. I actually want to be around my family a lot too. So I always grew up watching a lot of Ghost of Mr. Chicken and Scooby-Doo when I was a kid. Anybody else watch those? Ghost of Mr. Chicken and Scooby-Doo? And I always said, look, if I ever get wealthy enough or rich enough, I'm going to build a big house that has secret passageways, bookcase doors, and just cool stuff in it. So in my home, there's a bookcase door that's downstairs in my basement that you push a button and you pull a book, and then it opens up into a small 1,500 square foot office, which is in my house. And then I'm also building another studio and another secret bookcase to record these videos and stuff. It's just cool stuff. I have fun with it. So don't give up. You're in the right place at the right time. Congratulations. You are in the right place at the right time. So let's do some quick math. The first presentation I'm going to do with you today is going to be how to properly trade bonds. Now, tell me what you trade in here, because there's several hundred people in here. What do you trade? What do you trade right now? Do you trade stocks, options, futures, forex, bonds? What do you do? And then also tell me, after you tell me, so a lot of stocks and options, guys, that's super, super cool. Now, I trade a lot of gold, and I trade a lot of bonds. I also trade a lot of everything. I trade stocks, options, futures, forex, bonds, currencies, crude oil. If it moves, I trade it. If I can make money on it, if I can make money and there is a market on toothpicks or Tic Tacs, I'd trade that sucker. Okay. For me, I'm just a trader's trader. I'll trade anything and everything out there if I can make money on it. Now, if I can't make money on it and we don't get along, I just stop trading it. Okay, so let's do a little bit of math. I'm going to first show you. Let's see here. I'm going to show you a strategy that has a potential. I'm going to say potential a lot because I'm registered. I'm a Series 3 and a Series 30. The reason I'm a Series 3 and a Series 30 is because I own a brokerage firm, a futures IB. The reason I do that is it allows me to set my own commission price. So as a trader, if I can set my own commission price, that's an advantage because now I don't have to worry about, churn and burn, and I don't have to worry about the transactional cost of actually doing business. Does that make sense? So in the process of doing that, I had to take a test and get a 70 on it. And I had to take a couple of tests and get a 70 on it. So that's the only reason I'm registered. Now, if I was to tell you that I was going to teach you a trading strategy that had a 41.3% likelihood of being successful, would you take it? So here we're going to get into the part of it. No, depends. No. Somebody said hell no. That's interesting. Depends. Yep. No. So it's about 50-50. About 50 no. About 10 or 15% depends. Depends. So, all right, maybe. And I had one hell no, which is very interesting. Relative to what? So here's the question. So if I was going to share with you a trading strategy or tactic that only worked 41.3% of the time, would you be interested in taking it? Or would you want to know more? Oh, I get one hell yes. That's awesome. All right, so let's do the math. So here's the risk to reward ratio. So if you risk $156.25 to potentially make $1,000. Now, heads up, I've actually been risking 156 to make 2,000 lately, so it's really even better than that. So let's walk through the math. Now, I am terrible at math. I think in high school and in college, I always had C's and D's in math class, so this is going to be a stretch for me. So let's say we're going to say we have a string of 10 trades, all right? So out of the 10 trades, our first 6 were just losers, right? Like loser, 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 loser. 6 trades with $156 loss each time, so we lost $936. Now, you're probably sitting here going, well, that's great. You are a great, wonderful trader. You had 6 consecutive losses for minus $936. Okay, I'll give you that. So either I can't trade my way out of a wet paper bag, I suck, I'm unlucky, or my trade setup's just not working right. Those are all 3 answers that would be valid at this point. Now, let's go for the next 4 winning trades. Obviously, this is a setup, right? Let's say I had 4 winners in a row where I had 4 winning trades and I was going to make a maximum of $1,000 on it. Now, I come out on the plus side of $4,000. Now, if you round this math up and you come out, what you do is you go 4,000, all right, minus $936 gives you $3,064. Now, if I was going to share with you a strategy that only worked 41.3% of the time, would you be willing to take said trade? Yes or no? So, see, it really depends. Like when you ask a question like, well, what's the percent trade setup for that? Well, it's 98%. Well, I mean, I can show you a trade that works 98% of the time. It will make you 0 money. It'll actually lose you money. All right, so it depends on the win-loss ratio. It also depends on the risk-to-reward ratio. Does that make sense? So if you're risking this, okay, let's say that the risk is this, okay, but you're trying to make this, then it makes sense to do the trade setup. So if you have a very small risk but a very high reward, it makes sense. You can do stuff that has a 20 or 30% win-to-loss ratio. Okay, so let's say this thing's worse. Let's say, all right, well, I'm no way I'm going to be able to do that. I'm going to be much worse than that. Let's say you have 7 losses in a row of 156. You're going to lose $1,092. You said max was $1,000, so the math is not realistic. John, it totally is, because I go for 2,000 a lot, so it's very realistic. I do this trade all the time, and you could have already done this trade 3 times today. Okay. And you could have done it once on Friday and 2 times today, and I'll show you that in just a second. So let's say 7 trades, losers in a row, 1,092 is a loss, and we only had 3 winners. Well, we still end up netting 1908. That's not too bad, right? That's not bad at all. So even if the trade comes out and it only works 30% of the time, it's still going to be in your favor as long as you have some rules for the setup. So let's talk about the 5 stages of trading, and just let me know where you're at in the 5 stages of trading. Number 1, a ton of people usually get really successful at burning through cash when they first start to learn how to trade, where you're just so efficient at it, you're like, well, this would be more fun if I burned it, right? Anybody been through stage 1? It's the most painful stage to be in. All of us go through it, and you're like, oh, dear Lord, please make this stop. This is just painful. I just want to kill myself. And some people, it gets so stressful, some people actually do take their lives in trading. So you have to be mentally strong to do this business. Now, stage 2 is where you learn how to make losing a little bit of money a little bit more efficient. So what you do is you're like, I am so scared, I'm just going to risk very little amounts of money, and I'm going to stop losing massive amounts of money, but I'm just going to slow the burn rate. Anybody in stage 2 right now? And then stage 3 is where most people get stuck, is where you make a lot of money and you give it all back, or you make a little bit of money and you give it all back, make a lot of money, and then die the death of 1,000 cuts. That's where most people get stuck, all right? And then you got 4 is where you start making a consistent cash flow. That's dependent upon your your lifestyle, and then making a killing. I have an asterisk because I don't want to go to jail. It depends on what your killing is. Your killing might be $200 a day. It might be $200,000 a day. I just don't know where you're at. So real quickly, tell me where you're at. Are you in stage 1, 2, 3, 4, or 5 right now? Most people get stuck in stage 3. And the reason they get stuck in stage 3 is because of this. Is what happens is you have a series of large losses, okay, or little losses, and then just as soon as you have a little bit of profit, you're like, okay, I got to get out. Can anybody relate to that? Like, oh my God, I've lost so much money. I'm up $200 or $300. Just get me the heck out of this thing. Or I'm up $2,000. Get out, get out, get out, get out. And the reason you do that is you have the residual memory, or the dust of all those losses in your head and in your psychology. And you're like, God, I got to get out of this thing, because if I don't get out of it quickly, what's going to happen is it's going to turn into another massive loss. Okay? Or what you do is you do this: loser, 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 loser. Okay, I got a little bit of win. Okay, get out quickly. Loser, loser, a little bit of win, loser. And you die the death of 1,000 cuts. So that's style A and style C. The style that you really want to focus on is this right here. What you want to do is you want to have loser, 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 loser. Keep it together now. Don't quit. Loser. Boom. Big old gain. And then give it back on a series of small losses. Series of small losses. And then big old gain. Make sense? I'm not saying it's easy to do. This is how I try to trade every single day. It is not easy, but it is the best way to trade in my opinion. Small risk, unlimited potential. Small risk, unlimited potential. We just call it a big old hairy audacious target or a goal, right? So if we're going to risk 100, we want to make 1,000 or 2,000 or 4,000. Like recently in gold, we did one trade where we risked $300 and we made $8,000. That's the type of stuff I like doing. And I'm in a bond trade right now. Here, I'll show you it right now. Let me actually get out of this PowerPoint, and I'll say discard. So this is the actual bond trade that I'm going to teach you right now. I did it Friday. I only risked, look, $156.25. And when I said, hey, the max that you want to make it in this is 1,000, I'm actually on this one. I'm going for 2,000, and I'm going to get it, because it acts really good. If I don't want to get that, I could just trail my stop up here and lock in the $1,000. Does that make sense? So let me go back to my PowerPoint here. I'll get back on topic here so I don't get down a rabbit hole, because I'm bad for that. All right, so if you're losing money, it may not be your fault, so don't blame yourself too bad. I'm going to tell you a little story about Aesop's fable. So there's this scorpion and there's this frog. And the scorpion comes up to the frog and goes, hey, man, what's going on? And the frog's like, ooh, back up, man. We're mortal enemies. I don't want you to sting me and eat me. He's like, no, no, no. I can't get off this island. There's no more food on the island. If you will just do me a solid, let me jump on your back and take me over here where there's more food, I would be so appreciative. And he's like, yeah, no, not going to happen. And he edges himself in the water. And then eventually the scorpion talks the frog into it. I don't know how he did it, but he did it. And then, so halfway across the little creek or stream, the scorpion stings the frog in the back as they both sink to their death. The frog looks up to the scorpion and goes, why? Why did you do that? And the scorpion goes, I don't know. I guess it's just in my nature, as they both sink to their death. So if you're trading the market and this market goes like this, are my slides back up? I have no idea. If you're trading the market and it goes run, stop, reverse, run, stop, reverse, run, stop, reverse, run, stop, reverse, if you're trading that sucker with a trending strategy, then that one is your fault, right? Because what you're doing is you're letting the scorpion on your back and going, sure, hop on. If whatever you're trading is stinging you every time you get in it, just quit letting the scorpion jump on your back and trade something else. If you're a trend trader, then you want to trade something that goes like this, pulls back, this, pulls back, this, pulls back, like that. Or you want to trade something that goes like this, up, consolidate, up, consolidate, up, consolidate. Both of these on the right-hand side of the chart are way easier. I mean, a ton easier to trade. I mean, they're just a ton easier to trade than the other way. All right? Does that make sense? Are you guys seeing me draw on the screen? All right, it's okay. All right. So what you want to do is you first want to figure out what is good for you to trade, what is bad for you to trade, because there's this little sweet spot where you're actually going to make the most money. All right, let's see here. Let's see here. All right, so if you're gonna, so let's talk about a couple ways to learn how to trade the best market. If you're gonna trade, did anybody do this survey? What is the best market to trade? Well, if you're gonna trade, you should trade the S&P minis because they're the most volume and everyone trades them and they're the thickest. That's where you need to be in the market. Anybody get that answer when you ask your broker what you should trade? And then you end up trading them. You get chopped up. And then it's run, stop, reverse, run, stop, reverse, run, stop, reverse, and then you just get annihilated, right? And you start to ask yourself really quality questions like, why can't I do this? I'm smart, I'm successful, but this daggone thing is just too hard. Obviously, it's rigged. The stock market's not rigged. It's heads up. They're not going to hand you money, right? It is your job to physically go out there and wait for the good trades to come to you. Now, we call this business trading. We do not call it guaranteed wealth generation with zero risk, do we? No, because that's not what this is. We're trading this for that. So it's the same reason they don't call fishing catching and they don't call hunting killing. Because when you're fishing, if the fish are not biting, you don't catch anything. If you're hunting, you're not going to be able to run down a deer, right? They're just faster than you. It won't work. You're going to have to wait for the deer to come to you. So let's talk about why you may have been betrayed in the market. People probably just gave you this information, but it's not your fault. They lied to you, and you're asking yourself, like, who are they? They are other traders, the media, investors, and it gets passed down from generation to generation. Did you actually test what would be the best market for you to trade, or did you just blindly believe everybody on the internet, or did you just trust your broker? Heads up, never trust your broker. I love how people go like, well, I have a financial advisor. And my first question is like, how much is that cat worth? They're like, well, what do you mean? He's my financial advisor. I'm like, how much money does he make? If he's so good at being a broker or being a financial advisor, is he loaded? Is he a millionaire? Is he a multimillionaire? Right? You know what I'm saying? Like, if you're taking bad advice from somebody that's making less than six figures and he's a financial advisor, probably not the best thing in the world to do. All right? And the reason they call him broker is because they'll make you broker. It's still a little bit your fault, right? You do have to take some responsibility. It's your own money, right? But there's a better way to trade, and I'm going to show you some of that today. So answer this quick survey for me. True or false? If you can trade any market. Do you believe that to be true, or do you believe that to be false? If you can trade any market. All right, so this is obviously a little setup question, right? I would say, for me, I generally believe that, but I think it's true, but, and there's always a but when you say, and the other shoe's about to drop, right? True, but it's a lot easier to trade something that matches your style and your personality. Like if you don't like options and every time you trade them you lose money, stay away from options. If every time you swing trade you lose money, stay away from swing trading. If you swing trade and you stay in trades for about 3 weeks and you make money, that's your style. You first have to figure out if you're a trend trader or a counter trend trader. From there, then you'll pick the market that you're going to trade. There's certain markets that trend trade well. There's certain markets that are more choppy than others. So if you don't match your trading style to the right market, it's going to be very painful and very frustrating. Trading the wrong market or the wrong style for you is like hitting yourself in the head with a hammer. It's going to feel great once you stop. And that's what you're doing if you're getting stopped out, and you're frustrated, and you're just, God, why can't I do this? You're just trading the wrong market, or you're trading the wrong setup for that market. Now, think about this statement. What's wrong with trading better faster? Is there anything wrong with trading better faster? Now, I will be the first to tell you there is no such thing as a shortcut to long-term success. What you're going to have to do is you're going to have to work your ass off. Does everybody understand? Like, I love the people that come up to me like, oh, my God, you're so lucky. You're like, where, what? Huh? And for successful people, it kind of makes you a little bit mad. You're like, yeah, I'm so lucky. I put in 18 hours a day for the past 20 years. That's luck. So is there anything wrong with trading better faster? Now, I'm not talking about shortcuts to success. I'm talking about shortening your learning curve so that you can get there quicker. There are no shortcuts to long-term success. So a lot of people incorrectly believe that this is what success looks like. And I know a lot of millionaires, multimillionaires, and even a couple of billionaires. A lot of people incorrectly think this is what success looks like. You start here, START, and then you go up here and you build this just like a Yes, this is like a stair step. There you go. That's what, and ta-da! You finish here, and you are now wealthy and successful, and you're happy, and sunshines and raisins. Right? Does anybody ever? It's success is just keep going. Heads up. This is what really you start here, and this say this is your end point. This is what real success looks like. You start, and you're like, yes, yes. Oh, wrong. Okay, get back online. This is what real success looks like, and then you just keep on trying to figure out how to get to, oh, we've got more than 1,000 people in here. Sorry about that. Okay, and then you end up getting sidetracked. Oh, okay, get back on. That's really what success looks like. And if you think it looks like anything other than that, you're just a little bit delusional, and it's never going to go perfect for you. There's going to be setbacks. You're going to have to be able to take a few punches, and you're going to be able to lose some cash. All right? So let's talk about a couple ways that you can pick a better market to trade. Now, this is an old slide, but don't worry about that because I'm going to do a lot of live trades in front of you. I'm going to do a lot of live charts. As you can see here with the Dow, S&P, NASDAQ, and Russell, all of these have these ranges. The average true range is how much something trades in a certain period of time. So we're using a 14 period, and I'm using a daily chart for this slide. Like I said, this is an older slide. Don't let that freak you out. And what this means is the Dow is going to move 93 points in a day. It's times $5, so you're going to make or lose $465 in a day. S&P moves 10 points times $50 a point. You're going to make or lose $515 a day. The only problem with the Dow, S&P, NASDAQ, and Russell is they trade like this. Run, stop, reverse, run, stop, reverse, run, stop, reverse. Heads up, I'm breaking out. Psych, gotcha, sucker. Run, stop, reverse, run, stop, reverse, run, stop, reverse. Anybody have that experience with the index futures? Dow, S&P, NASDAQ, Russell, or any of the high beta stocks that are market proxies? It's very common for them to do that. Now, what I'm going to talk to you about is the bond market. The bond market is, we call it the grandma market because it is very nice and slow. It's very methodical. Now, you could make or lose $1,150 a day in bonds, okay? So here's how bonds work. Bonds go like this. They go up, then they pull back, then they go up, and then they pull back, then they go up, and then they pull back, and then they go up, and then they'll adjust. Which way would you rather trade, A or B? I'm going to go ahead and tell you, they're boring, and then, oh yeah, they're boring. It's like watching grass grow or paint dry. But that's okay. If that makes you more money and it's in a more environment so that you don't act like you're a heroin addict, like going, let me get that vein up because I got to trade, I got to trade right now, right? You can't trade bonds that way. What you have to trade bonds is like, okay, I'm going to let you go for a little bit, come back here, get my entry, give my fill, and then I'm going to ride you into the sunset. That's how you trade bonds. They're super, super easy to trade. If you were to come to me and if you were my brother or my uncle and you're going, hey, man, you're making a lot of money trading, what market should I trade first? I would go, well, first you should trade a stock first because you just should start in the stock market because it's just easier to understand. And then I would say, all right, now that you know kind of how the stock market works, jump over in the bond market. It's a lot easier to do. Just because it's really thick, it's really controlled, it's very methodical, and it makes total sense. After you've got under your belt half a dozen stocks to trade, then jump over in the bond market with me because it's just a whole lot easier. All right? So let's talk about why to trade bonds. The reason you want to trade bonds is it's going to take you from that stage 3 where you're just treading water, winning and losing, to now what you're going to do is you're now going to have a trade where you have a small risk and a huge reward. So now you're going to be holding a winner a lot longer. Don't worry about HFTs. HFTs is just all BS. It does not affect you any at all. I'm not saying it's all BS, but those orders don't affect you any. Unless you're in trades for less than a microsecond, it's not going to affect your trades. Okay? And these trades are not that. Any trade that you do, as long as you're not competing against HFTs, the HFTs are not a big deal. Okay? They're just jumping in front of you before a microsecond or two and then jumping out. All right, sprinters versus marathons. We already talked about that. Stocks, options, futures, forex, bonds. Do you know anyone who has a live trading window for a 30-year bond? I don't know what a window is. All right. We've covered that. Let's cover this because I got to cover 2 different PowerPoints for you today, so I'm going to skip forward. All right, let's go through bonds. I'm going to teach you Who in here has never traded a futures ever? Who's never traded a futures contract ever in life? Because I know the majority of you are stocks and options guys, which is fine. That's perfect. Here's one thing I will ask you, stocks and options guys. What is the one thing, and I bet you've had some very, very weird sleeping patterns the couple days. What's the one thing that keeps you up at night? What's the one thing that you toss and turn around and go, please, dear God, or whatever God did you believe in, right? Like, not just losing a trade, it's gaps, right? Is that the thing? Overnight gaps? Is that the thing that screws with you the most? Like, dear God, please, if you do gap up, dear God, please make it in the direction of my options play, right? Right? Because you're sitting there going, oh, this is brutal. If you trade stocks or if you trade options, just go get you a small futures account. What it's going to enable you to do is hedge that overnight gap risk that you're so scared of. You can start up with a $5,000 futures account, and since they're so leveraged, you could put on anywhere from a 1 to a 10 lot and hedge a lot of your risk so that you could actually sleep at night, because the futures, they pretty much trade 23 hours a day. Some of them a little bit longer. So do yourself a favor. Don't freak out. Futures are not, crazy risky, no more than anything else. Like, it's just another trade. But what we're going to talk about, I'm going to show you, I'm going to give you a little bit of a futures 101 here and tell you how to trade bonds. So let's go through how the bond market works, all right? And it's not hard. It's not confusing. So I'm going to go through this real quick. Come on, slide advance, please. There we go. All right, so the futures months have this. This is the most confusing slide you'll see in my entire presentation. If you're trading January, that month is F. So for bonds, it would be US F15. And you're sitting there, oh my God, I'm already confused. You don't really have to worry about any of this stuff. I don't even know who came up with this little letter system. It's the most confusing thing in the world. Don't worry about it. Here's all you have to remember. On bonds, number one, just call your broker. And here's the months that bonds are going to trade. So here's how you trade bond futures. I trade futures indices. Yeah, so if you trade index futures, then you know how to trade bonds. So what you're going to do is right now, the H month in bonds for me in US is going to be US H15. The first thing here is going to be the symbol, then it's going to be the month, and then it's going to be the year. So year, month, and then symbol. Has everybody got that so far? Now for a toss, it's probably ZB. All right, but for TradeStation, it's US. And on toss, you're just going to go /ZB, and they'll take care of all this complicated stuff for you. So that's how you're going to do it. That's what it looks like. So right now, you could trade the US Z14, okay, or you could trade the US H15 until the December contract is no longer available to you. Got it? So on the index futures, and a lot of times on the bonds, they roll over the second Tuesday of December or the second Tuesday of March. And then so now December, we're starting to roll over into the March contract. When the March contract expires, then we're going to start trading June. When June stops trading, we're going to start trading September. When September stops trading, we're going to start trading December. And I'll show you this all live. That's really the only thing you have to worry about. If you just call your broker and go, hey, what month in the bonds should I be trading right now? They'll be like, oh, well, you could trade either the US H15 or you could trade the US Z14. And they'll say, well, we're about to roll this one over, so you should trade that one. So you would trade the US H15. That's all you got to do. Pretty simple, right? Now, let's take a look at like how these creatures trade. So number one, they open up at 6 p.m. and they close at 5 p.m. So they're only closed for 60 minutes on the electronic exchange. Open Outcry opens at 8:20 and ends at 3 o'clock. That's when these things there's actual people that stand around in pits. We call them dinosaurs and still trade these things. And they'll eventually go the way of dinosaurs because everything is headed electronically. But, they're still going to have a half a dozen to 8 or 10 people down there trading because when the exchanges go down, some of the big institutions still want an ability to hedge their trades, so they like to still use humans and pick up a phone. So that's when they open up, from 6 p.m. till 5 p.m. Now, this is all of the bond markets that you have access to in the United States. I also trade the Eurobond, which is FGBO. But here is the U.S. market. That's the 30-year bond. And then you've got the 10-year note, then you've got the 5-year note, and then you've got the 2-year note. So I'm going to talk a lot about the 30-year bond. Now, I'm not talking about a bond like your grandpa had a bond or a CD. We're just talking about the 30-year bond. How many of you in here own a home? How many of you in here that own a home have a mortgage still? Okay, so do you think that your mortgage rate will stay here forever at these lowest rates? Probably not, right? Eventually they're going to rise, right? So if you're looking at sitting there going, I don't understand the fundamentals of bonds. You don't really have to understand the fundamentals of bonds. We're going to trade them technically. But as your interest rate on your home is going to rise, then the bond market will roll over. That's about the only fundamentally thing you really need to know, okay? I'll show you how to trade them technically. They have an inverse relationship. So if your interest rate on your home starts to rise, then the bond market will go in the inverse. In other words, it should go down, okay? But I'll show you how to technically trade these creatures. All right, now they open up at 6. They close at 5. It's $1,000 a point. The only bad thing about these things is they trade in 1/32, which means every tick is worth $31.25. I don't know about you, but I hate fractions. They still to this day freak me out, but I'll show you a really cool trick. Things that you need to be aware of is interest rates and other major market economic news releases. I use a website called Econo for that, and it'll tell me what major economic news releases are out. Oh, a live trading room. Yeah, we have a live trading room where we trade bonds in it live, so it's not a big deal. Yeah. All right, so there is the symbols. Once again, if you're on Infinity or TOS, they usually use Z. In TradeStation, they use Z. They use US. All right, so that's the schematic there. All right, pay attention to this one. This one right here. If you understand this slide, then you'll understand the rest of the stuff I'm going to be teaching you on how to correctly trade the bonds. Let's say that you were smart enough to get long at X at 135. Everybody with me? So you went long bonds at 135. When the price went from 135 and 1/32, how much money did you make? When it went from 135 to 135 and 1/32, how much money would you have made if you stayed in that trade for one tick? That's right, you would have made $31.25. That is considered one tick. All right. Now, let's say that you stayed in here from 131 or from 135, and then you went all the way to 135 and 15/32. How much money would you have made there? So all you're going to do is you're going to take $31.25, and then you're going to multiply that times 15. What does that come to? What is that? Anybody know? It's not 1,000. It should be close to 500. I'm going to whip out my iPhone here and do it with you. $468. Let's go. $31.25 times 15 ticks is going to be $468.75. Now, let's say that you were just lucky enough, skilled enough, in the right place at the right time. You got long at 135 and you held it all the way to 136. How much money did you make? $1,000, right? Now, the bonds usually move about 1.25 a day is about what they move, about 1.15 to 1.25 points a day. So you have the ability to make about $1,000 in bonds every day. Now, in most cases, you might have to stay in that trade a little bit longer than a day, but that's not a big deal. You can do this trade intraday and or overnight. So this looks like on your dome. On the left is TradeStation, and on the right is Infinity. So here you can see they look at them a little bit differently. They're going to chart them on their matrix or their dome as 131 and 31/32 to 132 to 132 and 1/32 to 132 and 2/32. So they're going to put them on their trading application as fractions, where other people on different platforms will say 133.12, which means 12/32, 133.13, which means 13/32. Does that make sense? So depending on what platform you're having, it may look a little different, but don't freak out. All right. Now, here's the coolest thing about bonds, okay? So for an overnight bond trade, you will have to have at least $3,000 in your account for an overnight bond trade. But let's go through a couple examples. I'm going to show you how to stretch your dollar a little bit. Let's say you placed a trade at 9:30 a.m. and you got out of it at 4:59 p.m. Is that considered a intraday margin or overnight margin? Intraday or overnight margin? Which one is that? Does anybody know? That would be considered intraday margin. Now, if you did a trade at 9:30 a.m. and you held it to 5:01 p.m., what is that considered? Is that intraday margin or overnight margin? Aha, that's right. That's overnight margin. So a lot of brokers will give you anywhere from $300 to $500 intraday margin. So you only have to have $300 to $500 intraday margin in order to initiate a trade. Now, let's say that you entered a trade at 5:00, well, you can't do it at 5:01. Let's say 6:01 p.m. and you exited it the next day at 4:59 p.m. Is that overnight or intraday? That's right. And for most brokers, that's intraday. Now, let's say that you did a trade at 6:01 and you held it to 5:01 p.m. What's that considered? Aha, overnight margin. So see, if you do this trade around 6 o'clock and you hold it for a full almost 23 hours, you're going to give yourself the ability to potentially make more money and let time, it's kind of like a crock pot trade is what I call it, because you just get in the trade and you just kind of let it simmer like a roast beef and potatoes and carrots, and it's just really yummy, right? And you're just like, that's good. I'm actually getting hungry just thinking about it. So that's one of the advantages of the bond market. All right, let's go on to the trade setup. So here's how bonds actually work. So what they act like personality-wise, like I know I've been married to my wife for 22 years. I love her to death. I still think she's the hottest thing in the world. I've got 3 kids. I know not to mess with her until she has coffee. Like, don't touch her, don't hug her, don't even look at her until she has coffee. So you have to be so good at figuring out how the markets work. So what you need is you just need an old crusty professional like me to tell you, like, hey, here's how bonds work. Here's how these actual things perform. What they do is they'll go up, and then they'll pull back either 8 ticks and then continue up, or they'll go up, pull back either 12 ticks and then continue up, or they'll go up and they'll pull back 16 ticks and then they'll continue up. Make sense? So they're going to do either an 8-tick pullback, a 12-tick pullback, or a 16-tick pullback. Now, you can't afford to do all those, right? You're like, well, which one is it? Here's what I do. I do the 8-tick first, and then if the 8-tick doesn't work, I then go to the 16-tick. This is how I actually do this trade. So what we're going to do is we're going to try to figure out, like, okay, all right, bonds, which direction are you? Are you trending up? Are you trending down on the daily? All right, cool. I just need you to make an intermediate high or an intermediate low, and I just need to count back 8, and I'm good. So here's how it works. You're going to look for a high or low. You're going to try to stay on the side of the daily trend, and then you're going to look for an 8-tick or a 16-tick reversal. I don't do the 12 unless I just miss the 8-tick. So the bond market goes up and pulls back either 8, 12, 16 ticks, and then continues on its overall trend. Pick 2, don't do all 3. If you do all 3, you're just going to decrease your odds of the trade working out in your advantage. So I picked the 8 and the 16. You could either do the 8 and the 12 or the 12 or the 16. For me, I almost always do the 8 first. Now remember, this only has a 41.3% success ratio. Do you care? You better not care if you understand math, right? You're like, no, don't really care that much. All right, we've already went through that. Let's say it's worth. Let's say it's worth. Let's say that it only works 3 times out of. Huh? No, I'm good. You'll be okay. Thanks, baby. So 7 trades, you'd be 3 times out of 10. You're still going to make a pretty good setup. Now, here's what I think this is really good for. I think that this trade setup that I'm about to share with you is worth, I would say, anywhere from $8,000 to $12,000 a month in income if you do it correctly. All right. My risk is always $156. So let's go through this trade setup. So what I want to show you is first a couple of losses. So let's say that I had this pegged as going in the up direction in the daily, and let's say I went long here. Does anybody know what happened when it went in the up 5 ticks against me right here? If I went long, or yeah, if I went short here or long, depending on what trade setup I'm looking at, because actually in this case scenario, I've actually got it pegged as going short. So I shorted it here, and then it went against me 5 ticks. What's that called right there? That's right, loser. And that's when I start going, oh my God, I'm a terrible trader. What am I going to do now? I lost $156. Oh no. And then I do it again and go, oh, here's another trade setup. Boop. And then I have another loss. Oh dear Lord, I've had 2 losses in a row. 156, 156, $156.25, $156.25. All right, bonds, you got me twice today. Good job. Here's what I look at. This is how I do it psychology-wise. I look at that as a loan to the market. And I am in some time in the future, I don't know if it's going to be the next 2 minutes or the next 2 days, I'm going to get that money back and then some. Because I'm loaning it some money, I'm going to get it back with interest, is the best way that I look at it, so that it doesn't freak me out mentally. Then I let the bonds open up. Here's the 6 p.m. market where they opened up again. Okay. Now, notice that I still have the bonds pegged as going lower. They open, and they trade up a little higher, and I go, I'm not interested in that. I have the bonds pegged as going lower. I then let them drop. Do you see the swing low right here? You see that little swing low right there that I got a little smiley face under? You see that? Then I want it to bounce up 8 ticks. I'm going to short it there. Short it when it's up 8 ticks. And then my stop is going to be 5 ticks. And then my target is going to be 32 ticks. Where does the 156 come from? Because I'm only risking 5 ticks. Does everybody understand the trade? Now, what's this called when you short something here and you cover it right here? What's that called? That's called a winner. And I was just in Vegas, so we'll say winner, winner, chicken dinner. So that's $1,000. So let's round this up to 300. 156 and 156. Let's just say it's 300. It's easy math. Minus 300. How much money did I net on these 3 trades? I mean, that's not too bad, right? It does not matter what time frame chart you use. You don't even need a chart to do this. You can do it on Dome. So let's walk through the trade setup. All right. First, in this trade setup, let's pretend that we are in a massive uptrend. What happened when we broke this trend line? We're like, well, the uptrend is no longer in effect, and I'm now in a downtrend. So what I want to do is I want to focus on shorts only. Do you agree with that trade setup according to the bond right here? Like we've broken a trend line, and now I want to stay short if at all possible. And then we sold off, and this is actually the actual trade that I did. I said, well, clearly this thing's in a downtrend. Then I only want to go short. Okay, go to the next chart. Now, this is a 5-minute chart. You can do it on a 1-minute chart. I know that we're in a daily downtrend. I'm going to let the market open up at 6 p.m. You can do this anytime, intraday or overnight. I'm going to let the bonds trade, and the bonds open up and they go up. And I go, well, you're just going in the wrong direction. You'll go up without me. Then it sells off. You see this little low right here? Low move. Then I just count back 8 ticks. I short it right there. You can see my entry. And I'm going to use a 8-tick bounce from that low. I'm going to use a 5-tick stop loss, which is $156.25. And I'm going to use a 32-tick target, which is $1,000 profit. Pretty simple, right? Let's break it down a little bit easier. Let's do the math. All right, we're in a daily downtrend. The market opens up here. It goes to the low, which is 146.430. Do you see that? Where that low was 146.430. Now, if it would have went lower, then I would have keep moving my line lower, right? I'd be like, okay, because here it never bounced, okay, that low's holding. So the low is 146.430. What is 146.430 plus 8/32? So here's what you got to do. You got to add 8/32 to that. So I'm gonna go. What's 8 plus 4? What's that come to? In most countries, it's 12. Right. So what I'm gonna do is I'm gonna say, all right, I'm gonna have a sell stop waiting for you here at 146 and 12/30. Who does not understand so far? Because there's over 1,000 people that's logged in here, and I want to make sure that somebody won't get the math. And if I lose you, I'll lose you. Does everybody understand it so far, or do I need to go over it one more time? All right, I got it. Very clear, right? If you can count to 8, you can do this trade. Now, what's our risk? Our risk is going to be if we get filled at 146.1230, I only want to take a risk of 5 ticks. So I'm going to take 12 plus 5 is what? 12 plus 5 is what? 12, 13, 14, 15, 16, 17. That's right. So my stop is going to be 146.1730. Everybody got it? That risk for us is going to be, we're risking $156.25. Now, target-wise, I don't really care what you use. For me, I've been experimenting. I've been using a 64-tick target. Okay? Would the sell stop, would that limit order be okay? Yeah, you can do a limit order. You can see that that's my limit right there. It's a sell limit order. I want to be filled at 146. It's not a sell market order. It's a sell limit order. Yeah. Now, in this case scenario, I had a target of 32 ticks, which is basically going to make me $1,000. Now, anybody want to know why this actual trade works so well right here? Why do you think it works? Like if I'm short here, what am I taking out of the trade right there? You can obviously see that I entered the trade. I don't even know when I entered the trade. It was like the 2100 here, 2100. How come I stayed in the trade so long? How was I able to hold my target for such a long time? Because I don't know about you, I am part vampire, but I do have to have some sleep. I'm not going to stay up all night long and look at this trade. As long as I have a stop loss, then this thing is going to work out for me. Either I'm going to wake up with $156 of loss, or I'm going to have some type of profit in the trade. Now, if you're sitting there going, well, yeah, that's only one case, heads up. This one would have worked. This one would have worked. That one would have worked. This one would not. We would have been stopped out on it. You see that? So there's 1, 2, 3, 4, 5. In this case scenario, 4 out of the 5 would have worked. Well, actually, here's another one. This would be 6. So 4 out of 6 would have worked. All times I'm talking about are all East Coast times. So this is what the trade setup looks like. The next morning, I was up in the trade, and then I trailed my stop, and I locked in $375. And then about 2 minutes later, it ended up tagging me for $1,000. Now, let me walk you through a real case scenario. Discard. All right. So you see this trade right here where I'm up 12.1875. Do you see that? I'm actually going for 64 ticks instead of 32 ticks. You see it? Let's walk through a couple of live trades. Number one question I get is, how do I determine the daily trend in bonds? What I do is I use Ichimoku. If you guys want, I will also teach you some Ichimoku here in just a minute. All right. Let's look at Ichimoku here on a daily. Do you see the chart that has black background and a bunch of candlesticks and a bunch of squiggly lines on there? I did it overnight. Yeah, I did it on Friday. All right. Notice when the bond market went above. I need a little bit different drawing tool here. Just hang with me. You see how the bonds went from below the cloud to above the cloud here? And now they're above the cloud? Now that they went above the cloud and that this white line went with me too, every time that I pull back, I want to buy the cloud. Buy the cloud, buy the cloud, buy the cloud, buy the cloud. I'll be daggone. Wonder how come I just got long a few days ago. I'm actually long in several different accounts in bonds. This is just the most recent little scalp trade that I've done on an 8-tick reversal. Targets are 32 or 64. That's the targets. So do you see how this is a massive uptrend on the daily? Now let's zoom this out just a little bit. And I'll teach you how to use Ichimoku in the next class that we're going to do. All right. You notice how the bonds have been they went up to this real high peak. They had a parabolic move. You see how well they trend? They had this parabolic move, then they pulled back, and then they're like, okay, little cup formation. And right here, they were just tough to trade, so I stayed away from them. Like, well, these daggone things are doing this. I want to stay away from that. As soon as it went back above the yellow and the purple here, we focused on getting long because we're in the cloud. And now it should go to 144 and back to 148 again. So I want to stay long on this trade setup. Okay, now let's go over to the trade setup. And I'll teach Ichimoku here in just a second. Let's go through and do an example with you. Does everyone agree that bonds are in a massive uptrend? Does everybody agree? Oh man, I spilt water all over my little righty thing. Give me just a second here to wipe this up. All right. Hopefully that doesn't short circuit anything up. Let me show you a cool tool here. It's called math. Do you see how this is your most recent swing high? I'm going to use a calculator. Does everybody see the swing high? So we're in a daily uptrend. And the most recent swing high that you had available to you on this 5-minute chart was 142 and 2/30 seconds. Watch how easy this is to do. Okay, I believe that to be a swing high. I'm going to go 22 minus 8 equals 14. Does that make sense? Now, we're going to move this over to the side. So then I'm going to say, okay, then at 14, oh dear baby Jesus, look at that. Look how cool that is. Does that make sense? So if you had this as your swing high, then what you do is you count back 8 ticks, bing. Can you handle that? Now, where would your risk be? What's your risk? Your risk is 5 ticks from 14, which is what? What would that be, 11? Is that what it would be? Somebody help me with math, because I'm not that smooth on math. 9, let's go 14 minus 5, 9. See, look here, I can't do math. You guys are way better at math than I am. So it'd be 9. So could you handle this risk for that reward? And then you'd still be in the trade setup. Now you're sitting there going, oh, that's just a, you know what, that's just like, dude, this is just the price action of today. I'm not cherry picking anything. How do you decide between the 8, 12, and 16? I always do the 8, and then if I lose money on the 8, I go for the 16 is what I do, Todd. Let's go see if we can find another one, okay? Let's say that you were trading early morning. You say, okay, there's the high in bonds. Then, okay, you see this high? What is 19 minus 8? Let's go, let's do this right here. 19 minus 8 is, it says 11, okay? So I would have to get long at 11, which would be right there. And 11 minus 5 is what? 11 minus 5 would be 6. Okay, can you handle that? You had a swing high. First, bonds are in a major uptrend on the daily and the 60-minute, right? Then you find a swing high point in either a 1-minute or a 5-minute chart. It doesn't matter. It's a math thing. It's not a time thing. And you go, okay, the swing high is 142 and 19/30 seconds. Minus 8 is, I'm going to have a buy stop at 11:30 seconds. You would have got filled on that. You would have then risked 5 ticks, and now how much money would you be up? If you were up, if you got in at 11:30 seconds, and it's trading right now at 25:30 seconds, how much money would you be up? What's 25 minus 11? How many ticks is that? 14. 14 times $32. 14 times 32.25 equals $450, right? Close. What time interval are you looking at? For the day, you want to look at the daily trend on bonds. You can also look at an hourly, but try to stay on the right side of the daily trend. So here's my question to you. Do you think you can do that trade? It's pretty simple, right? Let me show you an even easier way to do it. You can sit here and go, okay, the most recent swing high or low on bonds was, let's say you were going to do it right now. You can't because it's closed. So let's say, how would you do this trade? You'd say, well, the current high was 26. So what you would do is you'd go like this right here. You'd go, okay, you go 26, and you'd go 1, 2, 3, 4, 5, 6, 7, 8. So you'd have a bid at 142, 18:30 seconds. Is that right? How easy is that? You're going to risk 156 to make 1,000, or risk 156 to make 2,000. On this example, I risked 156 to make 2,000. Now, here's my risk down here. Now, is there anything wrong with trailing that stop? No, but don't trail it too aggressively. If you trail it too aggressively, if you move this thing up here to like 142 and 24:30 seconds, you'll get stopped out, right? Why? Because it's at 142.26. It's probably going to pull back 8 ticks and give you the opportunity to get back in there. So I'd want to trail it, but trail it at least 12 or 16 ticks behind that price action. Got it? So each trade is 156. Well, each trade, the amount of risk that I take is 156 on a 1 contract trade. If I'm in 2 contracts, it'll be 300, right? But I'm only risking 5 ticks on every trade per contract. All right, I'm going to open it up for a few questions on this trade setup before I go to some intermediate Ichimoku stuff, or some basic Ichimoku stuff. Any questions on this trade setup? I'm trying to kill you with the quality content here. Best time to do the trade? Anytime, whenever bonds are moving. I like it, you know, intraday and overnight. Best time to trail the stop, or best way to trail the stop? I like a 3-minute parabolic SAR on bonds. That works pretty good. A 3-minute parabolic SAR. That tends to work pretty good. Let me show you what that looks like. I'm going to remove all these lines. A 3-minute parabolic SAR, or you want to trail it a minimum of, I would say, 12 ticks behind it, right? So if you use let's see here. Let me remove this. Right-click, insert analysis technique. I'll do parabolic SAR, standard settings. Make these suckers really big so you can see them. Pow. All right. And then I'll just change this to a 3-minute. So in this trade setup, if you're long, so if you were long from, let's say you had, remember how we pegged that one as a swing high? Remember how we pegged this as we'd have been filled down here? We would be long, and our stop would now be 142 and 1930 seconds. What's the symbol for toss? /ZB. Can this be done on the TLT? Yeah, you have to modify it to make it work for you, Bob, but yes, it can be done. Talk about trailing stops. Trailing stops, you're going to, so if you know bonds go up like this, right? If you know bonds, if you're in a trade, just think about it logically. You know the answer. If you know bonds go up, and then they pull back 8 ticks, and then they continue on your merry way, and you're in this trade here, if your trailing stop is tighter than 8 ticks, you're guaranteed you're going to get stopped out. Right? So you can either do a 3-minute parabolic SAR, which is right now would be 142, 1930 seconds, or you're going to have to use a stop loss that's bigger than at least 8 ticks, because it's going to pull back 8 ticks. It might even pull back 12 ticks. So maybe you should do a trailing stop loss of 14 ticks. Is the commission the same as a stock? It costs about $5 to trade one of these things. $2.50 in, $2.50 out. So about $5 round turn. You're very welcome. Are there free charts that you can do this bond trade setup on? Open up a TOS account. You can open a TOS account for free, and that way you could just chart bonds. Yeah, cheaper than stocks, yes. Does the reversal entry price have to be with the day's trading range? Yeah, so yeah, that's a really good question. Who asked that? Troy. So if the bonds have already moved 1.5 points today, should you do this trade? Probably not, right? Because they've already exceeded their average true range. They're already really, really happy, or they're really, really pissed off at that point, depending on if they're going up or down, right? So if they've exceeded their average true range, which is their daily range for the day, don't play with them, because you're just asking for trouble, right? You're out late at night at 3 o'clock drinking. In other words, if you trade them past an ATR. Any broker suggestions for Canadians? Use TOS. TOS is available for Canadians, right? Yeah. When you're targeting 2,000 profit, you have to stay in an overnight though. Well, yeah, by default, because bonds aren't going to move 2 points in a day. I'm not going to say they never do, because if you look back here, this was a 5-point move in bonds. How much is a 5-point move in bonds? Does anybody know? If it's $1,000 a point, how much money could you have made on this day? Unfortunately, I didn't catch all of that one. I only caught 3 points of it. And I cried all the way to the bank. I don't just trade one contract, and I end up getting 3 points out of this 5-point move. So it's a good day, right? It's a good day. I'm just showing one contract because it's the lowest number that everybody can trade and everybody can relate to it. Interactive brokers are good for Canadians. There you go. Use interactive brokers. So you can get out anytime. Yes, within 23 hours. Like now the bond market's closed, right? Because the market's closed for the weekend. It'll open up tomorrow. It'll open up again Sunday at 6 o'clock. Yeah, minus 1 hour. So they're open for about 23 hours a day. They open up at 6 p.m. on Sunday and go all the way until Friday evening. So yeah. You can get TOS in Canada. Yeah. How do we test this strategy in a demo account? John, I have no idea how you test it for a demo account. I can tell you I've back tested it, sideways tested it, forward tested it, and I trade it in my live account all the time. It works. Period. How do you determine the best entry between using the 8 or the 16? It really just depends, Troy, on what your risk profile is. For me, I'm very risk averse, so I don't mind taking an 8 tick, but I don't want to take an 8, a 12, and a 16. So in order to get a 16 tick, it has to pull back 8 ticks. So what I do As long as I haven't exceeded about a half a point of range in the bonds, I'll do an 8 tick. If it's past if it's getting close to a full point in range, then I want it to pull back 16 ticks. Easy on TOS. They will help you with your active trader. There you go. TOS cannot use Canadians for bond. Okay, I didn't know that. Is the execution quick on bonds? Half a second or less. Are you recording this? Yes. All right. So can you see the power of why you may want to trade bonds? They're boring as, I mean, it's like no joke. It is like watching paint dry or grass grow. I'm not lying. But I mean, is that a bad thing? I mean, you don't always have to be hopped up on caffeine and be like the S&P traders that snort coke for a living, right? Or just chill, make a little bit of money, nice and calm. Just sit back, relax, let the market come to you. You're sitting here, you know, if the fish are biting, great. If the deer wants to come across your deer stand, wonderful. If not, just let it alone. Leave it alone. Do you do this before you go to bed? I do. Yeah, I do it in the overnight session, and I also do it in the intraday session. It works equally well on the intraday and the overnight session. All right? Bonds are like a slow drive to the bank. That's exactly what bonds are like. Bonds are like a slow ride to the bank. That's exactly what they're like. Can you set and forget with a bond trade? I do it all the time. I set it and forget it. So what I'm experimenting with right now, because I like finding really good markets to teach people to trade that are outside of the norm. So I'm experimenting with risking 156 to make 2,000, and then I'll say 3,000. Then I'll go 4,000 or 5,000. I'm trying to see what what's the extreme setup. Like the sweet spot is to risk 156 to make 1,000. I mean, look, I just did this trade the other day. It's not hard. I risk 156 and I'm already up 1,200 on it. I just did it just the other day. So what I'm trying to do is I'm trying to expand on it so I can make people more money and go, hey, the sweet spot's 1,000, but sometimes that sucker will run for you 4 or 5 points, and then I can really teach people how to hold it longer. What part of the South are you from? I detect a strong Southern accent. I am from South Jersey. South Jersey. No, not really. I'm from Eastern Kentucky. Again, what does the contract cost? Depends on your broker. An intraday margin trade on bonds will cost you $300 to $500. An overnight hold will cost you about $3,000. What is one of the worst streaks you've had with this technique? I mean, I've had 7 losses on it before. If you are in a 16-tick trade, then must your trailing stop be at least 16 ticks? No, it doesn't have to be. You would still ultimately only risk 5 ticks on that trade. But once it starts making you money. So now look, don't be a serial killer of profits. You don't want to choke your profits to death. One of the worst things I could have done is trailed this stop really fast. You see how I risk 156 and my stop's still there? I still haven't trailed my stop yet. I love doing that. I have no problem. What I need to bump it up to is probably about 142 and 6/30 seconds, or 142 and 19/30 seconds would be a little tight for me right there. That would just be that'd be just a little bit too tight for me. Gotta go learn some good. All right, cool. Alrighty. All right. Any other bond questions? You guys are asking some really good. On TOS, what is the U.S.? It's not the U.S. bonds. Yes, it is /ZB, not /US /ZB. How do you know that the high or the low has been put in before the entry? Steve, you don't. Like right now, that's a great question. So Steve's asking the question, like, how do you know if that's the high or the low? I don't. But I know that the bonds are in a major uptrend, right? So what I would do is I'd say, okay, until proven otherwise, that is a long. That would be the high tick. And what I would do is I'd have an entry 8 ticks from that. Now, if it went higher, I'd go, okay, got to move that up. And then my entry would be up 1 tick. Does that make sense? What month are you trading bonds? I'm currently trading the USH15. I'm trading the March contract currently. Let's talk about that, because strategically, why would I be trading the USH13 when they're both taking pretty good volume? The Z's only took 48,000. You see the USH15, it took 200,000 contracts today. Plus, I want to stay in it a little bit longer. But it's the one that's most active right now. What is your view on shorting the pullback short term, or is that mega aggressive? Max, that's a great way to burn cash. If you know bonds are in a massive uptrend, why do you want to short them? You hate money, right? You just hate it. You just hate money. It's not bad, Max, if you're a counter trend trader. I'm just not a counter trend trader. I'm not a really good counter trend trader, right? So there's nothing wrong with it. I'm probably 70% a swing trader, a trend trader, and about 30% a counter trend trader. There's nothing wrong with the strategy. You'll probably just get stopped out a lot. Do you start with the open or when you get in? Either way, you can start at the open, or you could just start as soon as you set your butt in your chair and go, all right, where's bonds at? They're in a daily uptrend. Where's the swing high? Where's the swing low? Let me start counting. Do you use hard stops? Yeah, I use hard stops on everything. Yeah, don't use mental stops. That's for people that hate cash. So the hard stop for me right now is 141.13. You are looking at a daily chart for the overall price and trade off the 5 minute. You look here. All you need is this. You can use. There's no difference in this strategy on a 1 minute or a 5 minute. This high is going to be the same high on a 1 minute as it will be in a 5 minute. Don't get tangled up in the subtle nuances of should it be a 1 minute, a 5 minute, 10 minute. It doesn't matter. It's a swing high or a swing low. The time frame matters zero. You can do it the same way on a 1 or a 5. So it's the same thing. With TradeStation, you post a margin is 21.45. Do you know what it is in their true margin? I don't know, Larry. You'd have to call your individual broker. Sorry. I do not. If the daily trend is sideways, do we stay out? Yes, we do. We avoid it like the plague. Until the parabolic is hitting a counter trend trade is hoping for a reverse. Yeah, I would not reverse trade bonds. I would just, you're better off. It's trading bonds is like your grandmother's chocolate chip cookie, right? It's just a great trade to do. There's tons of different ways to trade the bonds. This is one of my favorite ways to trade the bond market is on an 8 and a 16 tick pullback. So I hope you enjoy it. Now that we've done that, do you guys want to go over some over some Ichimoku? Can you use a tick chart? Sure you can. It's still the high. It's a price trade. It doesn't matter if it's tick, time, range, Rinko, won't matter. It's a price trade. Is everybody solid on bonds? You know how to trade them now? Or you know how to trade it this one strategy, right? We good? Solid? What are the chances of failure in a reversal trade? Nah, Dan, I have no clue. Use the current swing high of the highest high of the day. You're looking at this on, I'm just crunching it up. Let me put it on a 5 minute chart. So this is one thing that I think is going to trip you up if I don't explain. Let's say that I know nothing about this. Let's do hard right edge. Everybody know what hard right edge is? Where you just sit here and just look at the chart? Okay. Let's say we know this. You see where the price action is right here? Where's the high? 142 and 15/30 seconds, correct? The bond market opens up here. So if I know that's the high and it starts to pull back, where do I want my entry to be? I'll use this with green. So what is 8 ticks? What's 15 minus 8? Somebody do the math so I don't have to do it. And be good with the math too. Make me look smart. 7. So it should be 7, right? So then all right, that's the intermediate high. It opened up here. Now we're pulling back. Now we go, okay. Boom. Let me click on the chart. Click, 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 click. So the high's holding well. Oh, look at there. We got filled. All right, so once we got filled, then what was our stop loss? 5 ticks from 7, which is probably going to be 2, right? 2 ticks. We'll use this as a red color. Let me make these lines really thick for you. This is a good example. And we'll say this was just our where we're starting to count from, okay? All right, so now what do we do? Okay. I mean, that's not a bad trade, right? You see how it works? So that's the high. Now, that's not a bad trade. You happy with that? Now, let's just say that you came into the market and the market opened up and this is, you're sitting here and you're going, okay, boom, I just came into the market. All right, I just woke up and you're like, all right, well, I've got the intermediate high pegged as that now. Does that make sense? And you go, okay, where am I going to enter at? Well, I'm going to go 22 minus 8 is going to be 14. All right, my entry is going to be 14 then because I got up late or I just got into the market here, right? And then my stop is going to be 14 minus 5 is going to be 9. Okay, let's see how this works. Oh, that one was close, right? It depends. You probably wouldn't have got a fill there. It's close, though. 16 ticket, there was no good 16 tick examples on that one. There was no good 16 ticks example on that one, that one, that one. In the past, well, there's a 16 tick reversal right there. So in the past 5 days, you've only had one 16 tick reversal because we've been in a very good, nice, solid uptrend. All right, let me pause this. Let me just save this recording, and then I'll move into Ichimoku with you, okay? Take just 30 seconds to save this file. So how'd you guys like bonds? Good? You'll make a lot of money trading bonds. There's probably no sound because I'm not talking right now. Okay, let me save this file. And give me just a second, then I'll do one more. Go TT bonds. Save. All right. Why didn't you show the target with the horizontal line? Oh, I don't know. I just didn't put it on there. It wasn't like I was trying to pull the wool over your eyes or anything. I just had so many lines on the chart. It would have been a 32 tick target or a 64 tick target. But yeah, you could do the same thing, right? So if I entered way back here, 64, then the target would have been 162. It'd be one all the way up in here. It'd be like this right here, 164.32 right there. So in that case scenario, you would have only, on that one, you'd probably only make about 750 on that day. That's still not bad, though. I mean, you can live with it. Better than a poke in the eye, right? All right, I think I'm ready again. Let me hit record. All right, I'm going to try to teach you some Ichimoku. We're going to find market hours. Market hours, I have a cheat sheet, which makes my life really easy. I use this right here. To see where the bond says opens at 6, closes at 5, I use that cheat sheet. I think we have something at the office that we hand out as a PDF. If you email us at support@hubertsenters.com, we can probably get you a PDF of something like this for all the futures markets. Every futures market, unfortunately, is a little bit different. Like, see the Euro Bund? The Euro Bund right here, it had 500,000. It opens up at 2 and closes at 4. But look at this. If you like trading bonds, look at the Bund. Check this out. Watch this right here. At FGBL. Euro Bund. This thing right here is a great trading market. Look here. It's a Euro market, though. Euro Bund. Look at that. Look how well that thing trends. It trends even better than ours, than the U.S. market. Look at that. I mean, that's just simple. That's easy. Can I trade it in an IRA account? Yeah, you can trade futures in an IRA account. No problem at all. You might have to set it up as a trust, but it's not a big deal. Look at that. Look how pretty that is. That's just really nice. All right. Let's get to Ichimoku. All right, here we go. No, the Bund you trade different. Bund's a breakout trader. You don't do it on a pullback. You do it on a breakout. Not a pullback. Pure breakout on the Bund. Totally different creature. Our 30-year is run, pull back 8, 12, or 16. The Bund is breakout, pause, breakout some more. So it's a little bit different. You got to skin that cat a little bit different. No offense, cat lovers. I got a cat in the house. It's just the same. All right, let's go. Let's go over through some Ichimoku. Here we go. This is going to be different, but in a good way. I've already read your disclaimer, so I don't have to do it. This is the back testing results of Ichimoku. Now, you heard a lot of speakers today talk about Ichimoku, right? I've been using Ichimoku for years. This is the back tested results on the S&P 500 on the last 5 years. Stocks in the indexes, it works on 430 out of 500 stocks, which means it works 86% on the stocks in the S&P 500. You would have got a 33% return if you took every signal. I do not recommend that you do that because I would rather you stay on the overall daily trend. So if you take every signal, long, short, long, long, short, then you're only going to get a 33% return, which is not bad, right? But if you filter out all the counter trend trades and don't take those, and you use this 3-bar confirmation that I'm going to show you, you'll increase your run rate from 33 to 79%, and that's not too bad. That's really, really good. across all the stocks in the S&P 500. Now, it's profitable. It's been profitable on 29 currencies over the last 10 years. That also signifies for Forex too. All right. Now, my favorite time frame to trade Ichimoku is a daily, hourly, and a 60 minutes. So I've got a workspace where I go D6010. So here's what I'm going to do. This is Thanksgiving. I'm going to make sure that you know how to use Ichimoku before I get out of here. And then we're going to do a symbol list too. And I'm going to show you some really cool tactics and strategies to use with that. So stay with me, okay? Time frame selection. It's very important that you first have to figure out what your time frame selection is, okay? Your time frame selection is very, very, very important. For me, if I'm looking at a daily chart, I know I'm going to be in this trade for 20 to 30 days, potentially, right? Potentially. So because the cloud is going to extend to the right 20 bars or 30 bars. If I'm looking at an hourly chart, I know that the trade is the chart to the right is going to extend 3 days. I might be able to get 3 to 5 days out of that trade. And then if I'm looking at a 10-minute trade, I know I'm going to be in that trade anywhere from 4 to 6 hours. Does that make sense? I know I ask that question a lot, but if I lose you, and then I've totally lost you. So now if I was going to look at a weekly chart, then it's going to extend to the right 6 months. This is very important for chart frame selection. Time frame selection is really, really. Ichimoku is on everything out there. TOS, Ninja, eSignal, TradeStation. Everybody has Ichimoku. I'm not here to sell you an indicator. I'm here to show you how to actually use Ichimoku. All right, now, what is this? This is what you want. It's the #1 technique used in Japan 7 years in a row. 7 years in a row. It's been a #1 best-selling book. And in the past, I would say past 2 years, I've had the best-selling Ichimoku trading course in the U.S. markets. It's going to show you exactly what's happening in seconds. It's really good for identifying trends and signals. It's designed to produce very clear signals. So let's dig in here. This is what you want, and here's why. It's the edge for you. It's going to give you the past, the present, and the future. There's not a whole lot of indicators that will give you the future. There are several that will give you the past, and a lot of them will give you the present, but not too many will give you the future. So what we're going to do is I'm going to break these down component by component. Does everyone see a black chart with a blue, looks like an envelope of moving averages? Do you see that? And some candlesticks that says at ES and daily on it. Do you see that? Now my throat is not designed to talk for more than an hour. So I'm going to have to start drinking water. Oh. Whatever you're trading, if the price action of whatever you're trading, if it is above, let me change this ink to white. Ink color, white. If the price action of whatever you're trading is above this blue cloud, CLOUD, it's considered you're in a massive uptrend. Okay? The cloud is going to act like support. Okay? So here's support, here's support, here was support, here was support, support, support. Now, there's several different things you need to know. #1, the best signal to take, I'll get to this in a little bit, but the best signal to take is when the price action crosses in a major uptrend and has anywhere from 1 to 3 bars above that cloud. But for first, let me teach you the definitions. This is the cloud. Does everybody understand what the cloud is? Boom. Now let's go through the components. The next line, so what's the blue thing called? Cloud, C-L-O-U-D. The yellow line is called a turning line, T-U-R-N, and it's a 9-point midpoint average. It's not a moving average. It's totally different. So if you're in a massive uptrend, and if it breaks the yellow, then it will tell you like, hey, we've broken the short-term support, and we may potentially go to long-term support. So this is a 9-point midpoint average. So this is the current price action. This is what it's going to do in the future. You see how it's saying, you're like, hey, when this thing does go to sell off, and it will, it's probably going to come down here and nestle itself on the cloud, and then boing, bounce right off there like a little mini trampoline, right? Don't worry about the line where it's blue or brown. That's not that important. The space called. Main thing you just want to know is this is the upper range of support, bottom range of support. So we got the turning line and we've got the cloud. Third part, so we've got cloud, C-L-O-U-D. We've got the turning line, T-U-R-N. And now we've got the standard line, the S-T-D. Now, I don't know, maybe you got one of those in high school or college. That's not what we're talking about here. We're talking about the standard line. So this is the 9 and this is the 26, okay? Everybody cool with the terms so far? Cloud, turning line, standard line. Now, for you counter trend traders out there, let's just move back a little bit. So you're in a massive uptrend. If the yellow gets broken, where are you probably going to go to next? If this yellow was to be broken, where's our next entry point at? Where's it going to be? Just think about it logically. Where would you? Yeah, you'd bid right here, right? Then your next buy, if you broke this 1939 area, you'd fall back, and then you'd buy 1909. And then if that didn't work, you'd fall back right there. And boy, if that doesn't work, heads up, you're getting ready to make just a bucket load of money, because once it breaks on this side and it holds 1 to 3 bars below that, this thing will get annihilated to the downside. Now remember, if you've got a market that goes like this, you're never going to get the dead low and you're never going to get the dead high. Probably what you'll do is you'll miss the first 25%, and you'll probably either get out too early or you'll get out a little bit too late. But look what you got right here in the meat of the middle. You can make a really good living right here in the meat in the middle, so don't ever forget that. All right, now we've got the lagging line. Now we're going to bring this all together. So this is the past. We call this the lagging line. This is the turning line. And this is the standard line, and this is the cloud. Is everybody cool with the terminology? They have Japanese names, but if I say them, I'll just butcher them, so I just make up my own terms. All right, so cloud, standard, turning line, lagging line. The lagging line, all it is just the past of what the price action did, moved back. Now you know what the terms are. So now that we both know the language, let's dig in and learn how to use these things, okay? So this is the turning line. The turning line I need to change my color. The turning line will, in most cases, always be the one that's closest to the price action. Okay? So you see this little red line right here? It's the closest one to price action right here. I'm going to expand it a little bit. That line right there is the turning line. It's the one that's always closest to the price action. The standard line is the one that's next closest to the price action. The lagging line here is this blue line. It's always way behind the price action. Now remember, this is an old chart, but don't worry about that. When Apple was above the cloud here, it was considered bullish, right? When Apple had 3 days of close below the cloud there, what happened? Well, you're prepared to make obscene amounts of money when this happens. So, boom, there's the short, and then you stay short until it breaks the cloud. Pretty good little trade, right? So short below the cloud, it wasn't a valid uptrend. You had 3 days below the cloud, lagging line confirmed. Look at that. Look at that valuable, massive downtrend in Apple. Let's go through a couple other examples. So let's talk about how this little red line is calculated. How the red line is calculated is you take today's price action, you count back 9 bars. 9, 8, 7, 6, 5, 4, 3, 2, 1. You look for the low, and you look for the high. You find the high, you write that number down. You find the low, you write that number down. You add these two creatures up, and then you divide them by 2. That's why it's called a midpoint. It's a 9-point midpoint average, and it's not a 9-period MA. So they're totally different, because you're taking the high and the low of the previous 9 bars, adding them up, divide them by 2. It's a 9-period midpoint average. And that number is going to be 450.07. All your charting platforms just track that for you. Let's take a look at the standard line. The standard line is the midpoint of the high and the low of the last 26 sessions, and you do the same math. So since it's a 26, here's the standard line. It's the green line. It's the one that's next closest to the price action. You're going to start at today. You're going to count back 26 bars to back here. You're going to look for your low. You're going to look for your high. You add those up. You add those up, and you divide this by 2. That gives you this 425.42, which is what that green line is. Every platform charts it for you and calculates it. You don't have to do it. I'm just telling you how this thing actually works. Now, cloud span A is the midpoint of the turning line and the standard line. shifted 26 bars forward. So here's what this looks like. What is the one that's closest to the price action? Everybody write it down in the chat box right now. What's it called? What's the red line in this example called? It's the one that's closest to the price action. Is it turning or is it standard? That's right, turning line. Now, we're going to take the turning line and we're going to find the standard line. We're going to go to the midpoint between those two and we're going to shift it 26 bars to the forward. You got it? That's what develops up one side of the cloud. Boom. Next one, cloud span B. Midpoint of the high and the low of the last 52 sessions shifted. So, let's say that you don't know any of this right here. Let's say this was today. Then you count back 52 sessions, which would be right there. You look for the midpoint right there, and then you shift that thing. There you go. So you've got cloud span A and cloud span B. Make sense? It's a little complicated, but not hard. Now the lagging line is grandpa. It's the one that's the slowest. It's the strongest signal you can get. It's real potent, right? It's me, no grandpa. The price line close shifted back 26 bars. So on the lagging line right here, what you're going to do is you look at this price action right here of whatever's trading, and you shift back the price action 26 bars. That's what the lagging line is. So now, let's dig in and do some actual trading with Ichimoku. The lagging line crossing the cloud is one of the strongest signals that you can have in Ichimoku. All right, it's the strongest signal you have. When the lagging line crosses, it confirms everything. When the price action crosses the cloud, it is the second strongest and the second slowest, but it's also very powerful. When the price and the lagging line touch the cloud, those are support and resistance areas. And when the cloud spans cross, when it changes from blue to red, that's an early warning system. And when the lines cross the standard and the turning line, when they cross, we call it a crisscross trade. We're going to show you those. All right. So you see where the lagging line here crosses above this blue cloud? That signifies that warning, danger, Will Robinson, massive downtrend about to happen. So be on the lookout for that. Now, when the price crosses the cloud, that's also a really good indication that the thing's going to drop like a stone. Now, notice that we're in a massive downtrend here, and that the lagging line came to the cloud, and that the price action came to the cloud. Those are shorts. Until it crosses 1 to 3 bars above the cloud, then you want to short those trade setups. Boom. All right, now, these are a little bit more erratic. They're not great, but I know not all of you want to trade the way I do, so I throw them in there. So you see where the lines cross, the yellow and the green? Well, this is a massive uptrend. You went below those. Where are you going to go? To the cloud. Then you went below the cloud. Now you're in a massive downtrend. Now you see where the green and the red cross? You don't go long there. You let it criss once, then cross back the second time. You'd short it there, and then it drops again. So here you have another example, criss, and then cross, and then drop there. They're good for quick little pops. You just have to be careful because they're a little bit inconsistent. They're not the greatest signals in the world because they're so fast. It's like trading on a 1-minute chart. You're going to get a lot of false positives, right? Bullish signals for Ichimoku. When the price is above the cloud, that's bullish. When the price in the cloud are bullish, if they come from the bullish side, so in other words, above the cloud, the lagging line crossing the cloud is the main signal of trend change. The price crossing the cloud is an earlier but less reliable warning of trend change. And the price and the lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign that the trend is changing. Be on the lookout for thick clouds after a run-up, which could mean a trend change. Do you prefer clouds to using fib levels? I use both, David. Bearish signals are the exact opposite. I'm going to leave them on here for just a second. I'm going to grab a drink of water real quick as you read this slide. All right, let's move on. What do we got next here? Oh, we're about to start looking at some live charts, I believe. We're getting really close. All right. We've already talked about the results. I don't have to hammer you again on that, how profitable it is. I've already talked about multi-time frame analysis, right? What stops to use? My favorites are daily, hourly, and 10-minute. Let's talk about stops. The best stops to use on this is going to be, what about inside the cloud? Inside the cloud, you leave it alone. Parabolic SAR, or the bottom of the cloud if long, and the top of the cloud if short. All right, so here's what I'm going to do. I'm going to discard this. We're going to go right into Ichimoku scanning. So if you don't have great charts, don't worry about it. There's let me see if I can find stock charts real quick. STOCKCHARTS.com. I use a system that will do this for me for free, which is TradeStation. Well, it's free for me because I pay TradeStation. But if you go over here to stockcharts.com, and then you scroll down here to where it says additional tools, and it says predefined scan results, right? Bing! And I go right there. And then if I scroll down here to candlestick patterns, down here where it says Ichimoku, and then if you go move above the cloud or move below the cloud, hold down the control key and go click, and then click. Now what it'll do is it'll update me on anything that is above, that has moved above the Ichimoku on a daily or below the cloud on a daily. Now, the reason that's important is if the price action goes above or below the cloud on a daily, then that could be a potential trend change for me. So in this case, it looks like their system is locked up, but I think it's because we're all trying to hit it at the same time. Every time I do this webinar, everybody hits this side at the same time. What signals are you referring to on the S&P results you quoted? All I'm showing you is it worked on 480 stocks out of the S&P 500. All right, so hold on. Let's see if stock charts is actually going to work. Evidently, it's not going to work. That's okay though. Just trust me. If you go over here when all 900 of us are not on this webinar and hitting this website, if you click on move above the cloud or move below the cloud, then what will happen is it'll spit you out a list of all the stocks that are either above or below the cloud. I can show you how to do it on TradeStation. It's not hard at all. Okay, I'll leave this kind of calculating in the sideway. So let's go over here, and what I'm going to do is on Ichimoku, I'm going to go over here, and I'm going to say I want to go right-click. Now watch this. Watch how cool this is. And then you can do this with stock charts too. It's just a little bit slower. I'm going to go right-click. I'm going to go Insert Symbol List, and I'm going to tell TradeStation to find me all the largest stocks that have volume of at least trades of at least $5 or more, and it's taken pretty good volume. And I'm going to go click, and then I'm going to say, okay, add those to my TradeStation. Boom. All right. Now, watch this. Now, what I'm going to do really cool is I'm going to go right-click. I'm going to remove my futures info here. Let me copy this real quick so I don't break my futures info one. Paste window. There we go. Sync this one too. I'm going to remove these. Okay. Then I'm going to go right-click, format all analysis techniques, and then what I'm going to do is look for Ichimoku Cloud. Pow! There we go. Move down, and then hit OK. And then I'm just going to remove these over because I don't need them. Well, what this thing's going to do is it's going to start updating all these scans for me. See how it's updating all of these? I don't need all these. I'm just going to hide half of them. Aha! Now we're cooking with gas, folks. And then what I'm going to do is I'm going to move this to the side, like that. There we go. Now, I'm looking at a daily chart here, and I'm looking at a daily chart there. Now, what I want to do is I want to double left click, pop up, pop up. And what it's going to tell me on this example, where all these stocks are down here, let me get past my futures. There we go. New above, hold on, above cloud, pop. Here we go. New below, CHK. All right, so you see how CHK moved below the cloud on the daily? You see that? Does that make sense? That's going to be a really good short. Okay? It's new below, COP, move below the cloud. Heads up, this thing's going to go to 55. New below, CVX, new below, head up, this is going to 100. You got it? You see how easy it is? Then you say, all right, well, what if you want to do a new above? Okay, new above, XOM. That's a new below, I'm sorry. KSS, new above. Here you go. Here's a new long. Now it's got 1, 2, 3 closes above the cloud, and the lagging line is almost with you. All right. So can I do the same thing with futures? Yes, you can do the same thing with futures. So let's go through. All right, I'm going to do a daily chart. Let's go at ES. So now knowing what you know about Ichimoku Cloud, where's the ES going to go? It looks like it's in great shape. It's probably going to go higher. But where is it going to pull back to if it pulls back? To this yellow line, which is 2050. So you'd buy that with a tight stop loss and a target slightly above. Because we're in a major uptrend, but it looks like it wants to, this yellow line is going to act like a magnet, right? Let's go at YM. The Dow looks good. If it was, look here, should you have bought this right here? Yes. Should you have bought this right here? Yes. And now it's going to continue higher. If it pulls back to 17,718, that would be a good trade with a tight stop loss. Let's go to at NQ. NASDAQ, right? Where's the NASDAQ going right now? Higher. It just continues to go higher. Smaller time frames for futures, please. Yeah, I'll show you in just a second. Let's do this first. Now, there is a way. Let me show you this right here. I will move this chart over here, and we will do a daily, and then we'll also do a 60-minute time frame, and we'll do a 10-minute time frame. So let me show you a really powerful way to day trade these things. So first, let's talk a little bit more about the bonds, because I just spent time on the bonds, right? Let's do the Russell first. Oh, looky here. Well, the Russell's in a massive uptrend, but where did it find support at? Magically delicious. It found it right here at 1171. Pretty cool, right? Now look, you see the 60-minute sell signal here? You see the 10-minute? See the 10-minute in the lower right-hand corner? See where the price action went below the cloud? How long should that trade last for us? On a 10-minute signal, how many hours? Does anybody remember? What was the time frame? 10 minutes will last 4 hours. There's 10 minutes. This trade you should be in for 4 hours. A 60-minute chart will last for how long? 3 days. All right. Now let's look at bonds. Let's go at US. Pow. So bonds is in a daily long trend. Look at the 10-minute trade here. So this is a trade that I really, really like doing. I call it the snake trade or the crisscross trade. You see how the bonds went below the 10-minute? See how they closed back above it right here? On the smaller time frames, you only need one close to be above the cloud. On the daily, you want to have at least 3 candles, and you want the lagging line to be with you. On the 10-minute and the 60, you only need one candlestick to be above the cloud. Long, and then long again. Let's look at it on the 60. 60 minutes. See how the 60-minute, how it went below the cloud, back above, slightly below, back above. Long, you had a long here, you had a long here, and a long here, and a long here. Look at that. You see how easy that is? So ideally you want to stay on the daily side of the trend, or you want to stay on the first look at the daily chart for the overall trend, and then you break it down to a 60-minute and a 10-minute. The cloud span color doesn't matter that much. You want it to be above or below the cloud, right? So let's take a look at something else. Let's say like Apple, AAPL. Boom. Apple is a massive long, but if it was to sell off, then what we could do is we say, well, I want to be long Apple, but what do I do? Okay, what you got to do is you either got to let it come down to a 60-minute cloud and pop off of it, or you're going to have to let the 10-minute wiggle below the cloud and then back above the cloud. Does that make sense? You got it, how easy it is? Now, give me any symbol that you want to look at, and I'll show you exactly what you should do with that symbol. Oh, CHK. CHK. So, yeah, on CHK, we only have 1 bar below the cloud. We want at least 2 more bars. Notice when this thing crossed right here, you had 1, 2, 3 bars, but the lagging line did not go with it. That's how you knew it wasn't probably going to continue. Let's take a look at corn. Corn. Look here. Corn, you have about a half a dozen to a dozen bars above the cloud, and the lagging line is confirmed higher. So it's probably going to go higher. All right, so I'm going to do my best with symbols here, okay? There's still, daggone, tons of people in here. I guess it's a good thing, right? INTC. All right, INTC. Now look, take what I've already taught you and shared with you. Where's it going to go? It's probably going to higher, but if it doesn't, it's going to pull back to 35.72. If you're going to trade it off of a 60-minute, you would use an entry at 37.25, stop at 36.61, target of about $40. Now, I need to do something really quick because when I do this, a lot of people are going to ask me, like, hey, how you getting those targets? How you getting that stop? Here's how I do that. So if I go WMT, you see this? So this is an example of how I use my stops and my targets. Let me show you. So let's say that we've already made a ton of money on Walmart because we've told our members to do it. If I was going to do Walmart and said, okay, I'm going to enter here, my risk on Walmart would be from here to the yellow line. Does that make sense? Let me get rid of the lines. So if I entered right here at 87.54, my stop would be the yellow at 85.31. Do you got that part so far? Then what I want to do is I want to be a target of +1, +2, +3, or +4, and that's how I do my ratio. So I would be long right here. That would be my risk. Risk 1 to 1, risk 1 to make 2, risk 1 to make 3, risk 1 to make 4. Make sense? Really visual, easy to do. So when I'm doing that, that's how I'm calculating that up in my head. All right, Intel, INTC. Intel, entry 37.25, stop 35.72, target 42. Netflix. NFLX. Netflix, great short, stop of 36.75, target 300 even. ExxonMobil is a short. It's an aggressive short though, right? Because there's only one bar below here, but the lagging line's already down here. Probably going to drop to $85. Stop 93.66. VEEV. All right, VEEV. So this is a good trade. It's above the cloud, breaking out. Enter it there. Stop 30.41. Stop 30.41. Target about $37. Let's see here. At crude oil, this is easy. Crude oil, I've been telling people to get crude oil, and even in the room, we've been massively short crude oil. My target on crude, unfortunately, as of last week was $70, and it went through it. It's now going to go to $60. I did a video on it last week going, hey, some guy on CNBC said, there's no way it's possible to have crude oil trade at $60. I'm like, okay, it's definitely going to 60. Because you have crackpots come out there and start talking about like it's going there. TWTR, that's a short, target 60, stop is 71.76. TWTR, it's a good short. Now, let's go through this because this is important. It is below the cloud. Do you see where it's below the cloud? Now, it's below the cloud, so it's a better short than it is long. But see how it crossed above the yellow? Then where's the next place it's going to go on a counter trend trade? Even though it's massively below the cloud, and the cloud is red, so it's ominous, it's like, dude, you're going lower. It's probably going to bounce to the standard line, right? Remember, nothing goes straight down and nothing goes straight up. So what you would do is if you're already short this thing, tighten your stop up. If you're not short, let it bounce to 44.61 and then get short. Let's see here. Why do you aim for 4-to-1? I don't always go for a 4-to-1 risk ratio. I minimum go for a 1-to-2 though. Sometimes I'll go 1-to-1. Priceline, PCLN. Priceline is a leave me alone. It hasn't crossed yet, so it's a leave me alone. It's a better short than long though. AAPL. Apple long here. Stop 116. Target 130. MSFT. MSFT. All right. Between the two here, you have no edge whatsoever. You need to either let Microsoft go above 48.50 or below 47.29. In between the standard and the turning line, it's indecision, so leave it alone. CSIQ. CSIQ. Only just for the next 7 days. It's going lower. It's going to go to $20. Stop would be 28. Actually, you could use a stop of 26, 28. It's going to $20. AMZN. I don't know if it's going to do it in 7 days, though. Amazon is a decent long. Remember how we talked about 3 bars above the cloud, lagging lines above? Amazon be along at 338, stop 329, target 360. At Gold, are you serious? At Gold's a short. Gold is a massive downtrend. We have been short. Let me ask you a question. Why would I have been telling people to get short at 1,300 right in here? Why? Because it's going lower. And then also, when gold went up here and almost touched the cloud and rolled back over, why did I short it, and why did I tell all my members to short it? Yeah, because it's going lower. And then when it crosses the yellow on the standard line here again, now where's it going to go? That's right, 1140. You got it. CRZO. So how'd you guys like the webinar today? Good. This is a short, but it's aggressive because it's moved so much. It's probably going to go to $25. Stop would be $46.99. Thank you. Cheers, Jim. Webinar is awesome. Great resistance. All right. Let's do symbols one more time because there's still several hundred people in here, and I know I missed it. The spiders are going to be the same thing as the ES. SPY. It's the same thing as the ES. It's going to go to 210, stop of 205. It's the same thing as the S&P though. MEI. Did I type it right? No, MEI. MEI is sideways slightly higher, stop of 38.49, target 42. Can you do the Dow again? At YM is the Dow, same thing. It's going higher, stop of 1778, target 1800. KORS. KROS is an aggressive long. See how you've got 3 bars above the cloud, but lagging line has not confirmed? I'd wait for the lagging line to confirm that. If you wanted to get long, get long. Stop 74.48, target 85. AAL. That's pretty easy. That's been a long for quite some time. Stop will be 46.12, target 55. Cannot find a Ninja. There's a forum, I think it's called Big Mike. In the Ichimoku cloud charting course, we actually show you where to find it on every platform, like TradeStation, TOS, eSignal, Ninja. There's a little built-in indicator that you just have to go download. It's free, though. Robert, it is free. You just have to go download it off of a forum somewhere. CSCO. Hey, before I forget, let me give you guys an offer real quick so that I make sure I totally take care of you. I did some live charts. Let me just do this real quick because if I don't, Jeanette will kill me. Success stories. The course was awesome. I have taken the bond trading and made over $900. Do you think I'm happy? I just entered the bond trade, shorted another where I took profit earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had success trading during a course. I have the hardest head in the world. You couldn't have made it simpler. I'm going to come back to charts. Just let me do this real quick, or Jeanette will kill me, and then I'll go right back to charts. This is from Greg. Dude, thanks. You're like the only reason I have kept at it with trading, and now that I'm profitable, I can't thank you enough. It was really great, and I can't wait to attend the gold trading class. Thank you so much. The webinar series was a great experience, very informative, educational, lots of fun. But that's no surprise. All of your courses have been great learning opportunities. Cheers, Ron. So I'm asking you if you want to invite us, and here's what I'm doing. I'm going to give you the opportunity, and now first I need to tell you who this is for and who it's not. Who this is for: if you're serious about making real money in the markets, if you're looking for a proven system, if you can follow a simple set of rules and directions, and if you know that your success is tied to you taking action and not me taking action. Who this is not for: if you're a holy grail seeker, obviously I'm dyslexic, I forgot the R on grail. If you suffer from hopium, like I don't want to be your end-all, be-all of profit generation, right? If you're a guru surfer, and if you can't make a decision, and if you like to make things more complicated for no good reason at all, I'm not your guy. I'm definitely not your guy. There are 3 types of people in the world. There are those that make things happen, there are those that watch things happen, and there are those that ask what just happened. I'm not sure which one you are, but here's a fraction of what you'll learn in the #1 best-selling Ichimoku course in the United States. I'm going to give you the #1 best-selling Ichimoku course on the market. I'm going to give you my 7 proven setups. You will get my trading rules and my indicator settings. Heads up, I just use the defaults. I'm going to give you my checklist with cheat sheets. I'm going to give it with you, and you'll get entries and exits. I give you both, right? I'm going to give you the stop losses and the targets on every trade to take. I'm going to show you how to scan the markets with Ichimoku, which I actually kind of just did a little bit of that. I just did it really quick. I'm going to show you how to filter out the best trades to take. You'll never guess what to do next. I'll be right there with you. I'll lead you along the way. The best analogy I could give you is some people in the trading guru business, they want you to only spoon feed them. Some people actually want you to teach them how to fish. I'm like a fishing guide. I'm going to show you basically like, hey, this is the best fishing spot. This is the lure we're going to try to use to catch these fish. If they're biting, we'll catch fish. If we're not, we won't catch fish. You'll never guess on what to do next, and you'll know how to avoid the head fakes. All right, so here is your offer. Make sure you have absolutely zero risk with me at all. 100% satisfaction guaranteed, no question asked. If you don't love it, I don't want your money, and you can keep the course as far as I'm concerned. I've always over-deliver, period. My goal is for you to invest a small amount of money with me, and you get a 10 times extra return. So my name is actually tied to the business. It's actually my real name. My mother and father must have hated me because it is an odd name. The cool thing is it's a very easy name to get a URL for because it's so weird. If you go over to hubertsenters.com/cloudy, I'm going to put this in here. I'm going to give you the opportunity to purchase or invest in your future in learning how to use Ichimoku cloud charting secrets. The value of the course is $197, and I have sold it at that before. I also have a course on how to use Ichimoku with candlesticks. And I'm going to give you one follow-up webinar after you go through the live online class, which it'll be pre-recorded videos. You can learn at your own place, at your own pace, and at your own place. And then we'll do a day of live trading. So I'm going to give you the opportunity to watch all the videos, all the modules, learn everything that you need to learn about Ichimoku. Then we'll do a follow-up webinar, and then I'll throw you in a live day of the trading room. You know what? How about I just give you a week in the live trading room? Sound fair? So all of that, you can have it for $97, and I'll give you a 7 days in the trading room, and boom, if you like it, that's awesome. It is not a recurring fee. It is only $97 one-time fee. You go to hubertsenters.com/cloudy. You good to go? Does everybody know the link? I'm going to post it in here a couple more times. Oh, he makes money, Larry. He just moved over to Toss not recently, so he's down a little bit on that count, but he's up overall for the year. Yeah, I know. Yeah. Does anybody have any questions on the offer? I thought Andrew had the best course. And Andrew always have a nice friendly conversation about that. Andrew's a good guy, and Andrew's course is good too. You'll never hear me diss somebody else that's in the Ichimoku. And me and Andrew are friends too. The deadline is for the first 25 folks. I don't think I know I've probably given you a lot of value for today. The course that you're about to invest in for $97 is, like I said, the #1 best-selling course in the U.S. I've got the sales figures to back it up. And it's a step-by-step methodology. I teach you the same way I taught you how to trade bonds, and I also teach you the exact same way that I just showed you how to do some basics on Ichimoku. So let's go back out of here. Give me some more symbols. What about the bond course? The bond course will be later on this year. It'll probably be later this month. It'll be higher dollar price, though, yeah. GoPro. GPR, let's see here. GPRO. GoPro is a long off of the cloud, stop of 75.82, target 90. You can't access the recording yet just because we're stealing it right now. BP, you probably won't get the recording until early next week. BP is a short, stop of 40.85, target 36. FDX is a long with a stop of 175, target 190. BABA won't work on the daily because it doesn't have enough time, so we're going to have to use a 60, right? So BABA is next. If it gets back above 113.14, it'll be a long. You're very welcome. Now, I'm going to do something I've never done before. Let me find another slide here. So that is the Ichimoku course, right? Let me see. Jared gave me something here. Where's the daggone thing at? Where'd he give it to me at? Aha. Would you guys rather have the special offer for Ichimoku, or would you rather have the special offer for my favorite trade setups? I've got the link for both. I'm just trying to kill you with value. Now, my favorite trades is basically a series of modules where I go through all of my favorite trades in all the different markets that I trade. So I'll give you both links. You can decide which course you want to buy, okay? Is that cool? So whichever way you want to go. So let me pull this up really quickly. Let me show you what you'll get. Okay. So all right, let me do that. All right, this is what's in my favorite trades course. My favorite trades, I go through Module 1, swing stock trades and day trades. Module 2, swing trades and day trades. E-mini trades, gold swing trades, day trades, bond trades, and Ichimoku. Now, Ichimoku is just a 101 course. It's just a 101. It's basically what I just did earlier with you. It's not the all in-depth 7 setups, all right? That's what you're going to get in my favorite trades. Module 1, stock swing trades and day trades. Favorite way to scan the markets for swing trades. Best way to scan the markets for day trades. How to filter the trades that you take from day to day. That's in Module 1. In Module 2, you have the 7 horseman trades. 7 stocks that beat earnings 90% of the time. 7 stocks that beat earnings 80% of the time, so that's 14 different equities that beat the stock market 80% of the time. Stock gap plays, great way to trade stocks. And then we're going to talk about the gap and go trade and the gap and crap trade. In Module 3, I'm going to go through how to trade gaps on index futures. I actually own a seat in the index futures, and I'm going to teach you how to do the ambush trade. That's in Module 3. Talk about a fade trade. The crescendo trade is like having tomorrow's newspaper today. It's a great little trade to do. I just did it last week. Module 4, this should be 4, but it says 3. Let me change that. It's the famous goodnight gold trade. That's the trade where I risk $300 to $600, make $6,000, and then the gold rush trade and the gold bug trade. Now, in Module 4, you're going to learn the overnight bond trade, which I taught you in this workshop, right? This little Black Friday event. I'm going to teach you the sneak attack trade. So there's actually about half a dozen trades that I teach in the market. These are all already on demand. As soon as you hit add to cart, you can start watching them, okay? And this is what's going to be covered. I've already taught you the overnight bond trade, but it's just a little bit more in depth. So here, if you go here to hubertsenters.com/up, then you can take advantage of this special offer. So I'm just trying to kill you here, giving you massive value and 2 different options. I figure, what the heck, might as well give you as much value as I can. I'll give you my favorite trades. I'll give you a live Q&A session and a live trading session. I'll also throw in a week of the live trading room, okay? Yeah. The special offer is for $97, 25 people. Don't call the telephone number because nobody's here. I'm the only one here. If you call it, I'm not going to answer the phone, right? So just put in the link, hubertsenters.com/up. Here, I'll give it to you really quick in the chat box. Those are my 2 special offers for you today. You can take advantage of whichever one you want. Roy, it should be, yeah. There you go. So both of those are in the chat box, either hubertsenters.com/cloudy or hubertsenters.com/up, okay? Both of them are probably my 2 best-selling courses out there. Any questions? Let's go back to stock symbols, and then let's go spend some time with our families. All right, give me some symbols really quick, and I'll keep doing. Cisco, CSCO. Cisco is a long stop of 2689, target of 30. What was the website that has the Ichimoku download for it? Jack, it's covered in the Ichimoku Cloud Charting Secrets. I think it's called Big Mike's Forum or something like that. KLAC. I don't remember, but I know it's in the course. Great trade here. Clack, long, stop 65.88, target 75. BPH is, I can't type, BPH. Okay, I can, all right, BPH. Doesn't exist. Give me something else. CRM. CRM's kind of sideways. I would wait until it either crossed 60.45 or traded. I would have to wait until it crossed back above 60.45, and then target would be 66. MUI is a good. Oh, that's a good trade. Look at there. 3 days below the cloud lagging line. Short stop 14.40. Target $14. CVV is a good long, but see how it's starting to pull back. You're probably going to have the opportunity to buy it at 13.66. Target 16. HPQ is a good long, stop of 38.15, target $42. Express Scripts ESRX. That's hard on a dyslexic fella. A great trade here, long at 83.15, stop of 80.62, target 87. Would you get a deal if we did both offers? I don't have the ability to do that right now, Dan. Unfortunately, I don't have it. I gave all my team off Thursday, Friday, Saturday, Sunday, so I don't have the ability to do that. Sorry. FEY. It's a really good deal, whichever deal you take, or if you take both deals. I would leave this alone. It's dead sideways. Don't touch this one. At crude oil is lower. It's going to $60. At CL, we've already did that one. At what's wrong with my keyboard? CL. Yeah, crude oil is going to 60. Stop 74.30. GLD lower. Same thing as gold. GLD is going to 110. Stop of 113. Silver going lower. Target 15. Stop of 1607. FOSL. Good long, stop 109, target 117. For stocks above turning line, isn't it best to wait for it to retrace to turning line before? It depends, Mark. If you could do the breakout strategy, or you could do the pullback. They're both good. It just really depends on your risk level, what you're trying to do. They're both pretty workable though. For me, I'd wait for the pullback, or I'd wait until it pulled back on a 60 or until a 10-minute buy signal. Las Vegas Sands. It needs to be above 64, and it needs to be above the cloud. Right now, it's just a don't touch me, but get ready. BUD, Budweiser. Budweiser is a decent long. I would wait for a pullback. I would bracket trade this. It looks like a decent long. Stop 113, target 122. YHOO. How do you do it so fast? I've been trading for 22 plus years. Is how I do it so fast. Plus, Ichimoku allows me to just look at it, and in a couple seconds. If you just take the Ichimoku class and just spend a few hours just going through them, it's very easy to figure out after you've done it for a very short amount of time. There's a reason I'm such a fan of Ichimoku, because, like I said, I can do this, and I can tell you where the support, resistance, the stop, and the target should be just by using Ichimoku, and I cover all that in the course. Yacht long, stop of 51.30. What is that? I can't see it. 51.31, target 55. GMCR. GMCR, it looks like a decent long here off of the cloud. I would use a stop of about 140, target 148. How would you use the 5-minute? So my favorite time frames are daily, 60, and 10-minute. Therefore, I wouldn't use the 5-minute. But the 5-minute, I would use it the same way I use the 10. Yeah. SLB, Schlumberger, short, obviously. Crude oil's going south, and all this stuff's going to go south too. Target 75, stop 91. VRSN. If I haven't hit your stock, if I have not hit your stock symbol, if I have not hit your symbol, do it one more time real quick, and then we'll get out of here, okay? I have to leave now. I'll look up your links and get later. What make you do a bracket trade? Bracket trade would be like XOM. A bracket trade is like this, and I covered in my favorite trades. Bracket trade is like this. You bracket the high, you bracket the low. Whichever one breaks first, that's the way you go. All right. MU. When is the Ichimoku class? It's live right now. It's an on-demand course. All you have to do is hit add to cart, and you can start viewing the videos. You go through the videos, and in 30 days, we'll do a Q&A session after you went through all the videos. It's already pre-recorded on demand. MU is a good long. Stop of 33.96, target 38. TLT. Come on, TLT's going higher. TLT's going to 124 with a stop of 120. Thank you. I signed up for your course. Thank you, Steve. Please explain the Dow again. I took the wrong trade, and I'd like to know when to get out. HH, what's your stop? What is your stop on your trade setup? If you don't know your stop, just get out of it now. BRCM. I mean, Dow's going higher, right? The Dow's going higher. I wouldn't say the Dow's going lower until it broke 17,718. Until it breaks below 17,718, it's going to go to 18,000. At NG, Natty Gas is a leave me alone. At heating oil is a short, target of 2. XONE, I only have a few more to go. XONE is a leave me alone until it gets through 25. It's getting close though. RRC is a good short with a stop of 70 and a target of 60. Signed up for the Ichimoku course. Thank you, Andy. Thank you, Regina. Thank you, David, Mark, Marilyn, Patrick. Thank you, thank you, thank you. What guidelines do you use for trading options? So on Ichimoku, what you'd want to do on options is you would use this for options, APL. If you're going to do weeklies, then use a 60-minute chart. If you're going to be doing monthlies, do a daily chart. That's what I would do. Logging off now. Take it easy, Manesh. All right, I think I got everybody. Coca-Cola at KO. Hold on, KO. You want Coca-Cola or Coca? Coca-Cola. If it gets through 44.83, it'll be a decent trade. Stop of 43.86, target 47. You want Coke at Coke. You want corn, not corn. Dang it, what's the symbol for cocoa? Give me the symbol for cocoa if you want it. I've got it over here, but I don't have. Let me grab it real quick. At CO. No, at CC. That's what it is. At CC. There you go. At CC. So at CC is a good short. Unfortunately, is above the turning line, so it's probably going to go to 29.75. So it's a little bit of an enigma. All right. Thank you guys for coming. I really appreciate it. I did my level best to give you the utmost value I can. Here are your 2 links. Okay, I'm gonna give them to you both again. I really appreciate you guys coming. Here is the Ichimoku class. Bing. And here is the My Favorite Trades class. They are pre-recorded. You don't have to do anything but sit there and watch them in your privacy of your own home. And then at the end of the month, we'll do a special Q&A session, and then I'll give you a week in the live trading room. I appreciate you guys showing up. Good luck. Hope it helps. Have a great weekend, and I'll see you guys on the videos.